We are super excited. We are talking today with Dane. We've got an amazing training program for you. Just so you guys know, there's going to be more business sales, I believe, in the next 5 to 7 years with the number of baby boomers that are going to be selling their business more than ever. So if you've ever thought about becoming a business broker, we are going to train you on everything that you need to know. So we're going to start by talking about finances, because I think the first place we're going to teach you on is the P&Ls, the balance sheet, all the finances. So let's dive into that real quick.
As we've talked about in the past, business owners themselves don't even know the difference between P&Ls and balance sheets, right? So what we're going to do is we're going to help you understand the difference between a P&L and a balance sheet, what lives on each one of them, why each one of those documents are important, how to dissect each one of those documents so that you can create a valuation for a potential seller that you're going to list their business, and the nuances that come with the P&L and add backs, and what is an add back, what isn't an add back, when does an add back apply, when it doesn't, because there are nuances to all of these things. It's not just cut and dry. So we're going to teach you a lot of different things that you will need to know to be as successful as possible from the P&L and balance sheet perspective. The other thing that's really important to understand is learning how to read a tax return. There are lots of people who don't even know how to read a tax return, because the idea that the information from the P&L and the balance sheet reside on the tax return is absolutely true, but they're in very different places. They're in different places if you are a S corporation, if you are a C corporation. There's different things. There's different things that go into each one of those documents.
To that note, what we talked about is 85% of these smaller businesses are sold through an SBA loan. And if the profit and loss does not match the tax return, the SBA is going to say, and kick it back.
Yeah, it won't qualify. And then you've lost 85% of the potential buyers that you have.
Yes.
The other one is a sole proprietor. There is a tax return for a sole proprietor that looks completely different than the other categories. So those are the things that we're going to help you understand, is how to get through a lot of those documents and what to put where. There's a document called a cash flow worksheet. So we talked about add backs and what is an add back. Then you have to document that and create a cash flow worksheet, because again, we're setting up the sale for a buyer to be able to easily digest the information that you're giving them. So you don't just send a P&L out. You create a cash flow worksheet so they understand, well, what are these add backs? And remember, a seller is going to have to defend is not the right word, but they're going to have to give you backup for the add backs that you're adding back. And those are the things that we're
because like we talked about, is if you are saying, look, I'm taking a $200,000 salary, I'm the current owner, but as soon as you get rid of me, you'll be able to add back $200,000 in profit. Well, guess what? If you're doing 5 jobs, and in order for me to replace you, I now have to pay $400,000. Now that picture doesn't look as good. So it's really important to know as well in the finances, how much and how many hats is that owner doing in order to figure out, is this a profitable business or not?
To that end, if you're making $200,000 as the owner, but to replace you, it's going to cost $100,000. You can only add $100,000 back.
Right.
But a lot of people don't understand that.
Right. All right. So finances, we're going to really teach you that. You're not going to learn that anywhere else. Let's talk about the psychology, because you kind of have to be a little bit of a psychologist in order to work with people, helping them sell their business. Because like we said, this is their baby. Yeah. This is all they know. They've tied their identity, a lot of them, to this business. And so you have to be walking lightly, a little bit, treading lightly, so that you're not ruining the relationship either.
Yeah, I think the if you ask me what I do, I don't help other people buy and sell businesses. I am a part-time coach. I'm a part-time counselor. I'm a part-time psychologist because that's really what we're doing, right? As you said, I think the most important question in the English language is why. And that is what we're going to teach you to really grapple with so that you can help pull out from your sellers, the people that you're helping sell their business, why they're actually doing it. And that just scratches the surface on the psychological idea of what happens when a business transitions from one party to another. And it's throughout the entire deal. There's psychology throughout the entire deal, the negotiation, getting the listing agreement signed, getting the contract signed. Once you get into each one of the pieces, what does due diligence look like? What does the NDA look like? Or the non-compete. There are so many things that go into the transition of a business from start to finish, and psychology really is the number one thing in order to help you get where you want to be. Because at the end of the day, what works best for in the transactions that I've seen that have been the most successful, it's been a win-win for the buyer and seller. But you need to understand what makes everybody tick on both sides of the equation.
I think, in my opinion, after COVID happened, I would say if you asked any business owner, they would say running a company or running a business today is harder than it's ever been. I don't think anyone would say, 10 years ago it was easier, 5 years ago it was easier. I really, truly believe that it's harder now to run a business. I believe that people's health is in the worst shape that it's ever been with the food that people are eating, there, just all the toxicity that's coming. People's health is the worst that it's ever been. So, with those being said, that is why in the next 5 to 7 years, more people are going to sell their business than ever. The baby boomers, I'll throw up some statistics and I'll share that with you guys so you can see the numbers are staggering. So if you've ever thought about getting into being a business broker, now's the time to do it. And one of the things that people say about me, they always say, Chantel, you really are like that Wayne Gretzky quote. You see where the puck is going, yeah, not where it is right now. And I do really try to do that. And I'm telling you guys, mark my words, the data is in. Yeah. This is going to be the biggest boom. And you've got to educate yourself and learn what it's going to take. And the truth is, you don't know. I have a good friend of mine. She was like, one of my friends, she was in the best health. She was in her early 50s. She was in the best health she's ever been. And 2 weeks later, she found out she had like stage 4 cancer. So it's like things can turn on a dime. You need to get your business right so that you can sell if something does come up. We pride ourselves on knowing the contracts backwards, forwards, and inside out. Like I will tell you this, I've written 7 books now and I hate to read and write. So what I do is I memorize the contract. I just know it. I literally memorize the contract so I know it so well. And so it's really important for you to be able to know those contracts. So talk about that for a bit.
Yeah, and there's not just one contract, there's several contracts, right? So if you're talking about listing someone's business for sale, you're generally going to have a contract between you and the business owner to sell their business. And then when we talk about getting the business under contract, there's the contract itself, but then how is the business being funded? Then there's a portion or an amendment for that portion of the contract. Who's buying the business? There might be some amendment for that portion of the business. There's things that you have to really understand about litigation and liabilities and what's being transferred. There is so much that goes into the contract that it's not just you can't. The good thing is that we're going to teach you how to read it, put it into your own words, and then help the person, both buyer and seller, because they're signing the same contract, understand what it is that they're signing. Then you're closing a business. So then there are contracts that are written between generally attorneys. Sometimes you have to help the buyer and seller understand those because not every transaction does the buyer and seller both have an attorney. So contracts rule this process, and you have to be good at dissecting, understanding, and being able to articulate to the person that you're working with what these mean and really how it affects them.
Let's talk about funding, because knowing all the different types of funding that is important. And not only that, since 85% of the small businesses are using an SBA loan, knowing you are a complete expert at knowing everything that SBA wants. So let's start by giving them some examples of things that they'll kick back first of all, and some hard lessons. Give some practical lessons right now of things that you've learned with the SBA funding and other funding.
Sure. So first and foremost, the thing that's interesting, how SBA works is Small Business Administration has guidelines for loaning money. And oftentimes a bank, because bank to bank to bank, will have different guidelines. So they will put guidelines on top of the SBA guidelines. So one of the pieces of information that you're going to understand is how to choose a SBA banker that you build a relationship with. And what does that mean? What does that look like? Because every bank has some nuances. When you get to understand what those nuances are, you can potentially identify what could be a good fit for the buyer who's buying the business. Because again, one of the things what happens in a contract is, generally speaking, the seller and buyer are on opposite sides, but once the contract is together, they're on the same side because they want the transaction to go through. So you're working with both sides, potentially working with both sides of the transaction. And the SBA guidelines, you really do need to understand. Like, there is a new SBA guideline that affects a lot of people buying businesses right now. So these are the things that we're going to teach you, is how to get a handle on what those SBA guidelines are, how it can affect your deal, and the things that you're going to be working on to ultimately get the deal all the way through to see it through to fruition.
So what would you say? Let's give a couple of nightmare stories, because I think people learn from nightmares. So talk about a few nightmare stories of things that have happened where the SBA deal just fell through.
So I'm going to give you a little piece of information. I have, in the 10 plus years that I've been doing this, I have never had an SBA deal that the banker has said yes to that has not gone through. It's because I create good relationships and we have good deals. But I'll give you some nightmare stories. So here's the reality, and it goes for anything in life. If you don't tell the truth at the beginning, you're going to get burned.
And people do, I feel like, with businesses, because again, it is so tied to their identity, they tend to puff things up. I mean, whenever I meet with a business owner, they do tend to puff up the numbers. And then when we actually get down to it, this is where they say the numbers are, and this is where it realistically is. And do you feel that way a little bit?
Yeah, and that's why we work with certain people, and some people we're just not able to because their baby's ugly. So, but the reality is that oftentimes it's vetting the buyer appropriately before getting into the SBA process, and it's things like if you're in the middle of a divorce, you can't get an SBA loan. It's knowing things like that, right? It's felonies. If you have a felony, you can't get an SBA loan. Now there's certain nuances that you can, but knowing this stuff ahead of time, I've had deals stall, but ultimately got them through. So it's knowing that, getting the right information, asking the right questions about that SBA process. Because again, if 85% of the businesses that you're going to sell are going to use an SBA loan, you need to have a handle on what that process is for you to be successful.
And to clarify, when he says that about the divorce, if you're in the process
Correct.
of getting divorced,
Correct.
if you've gotten divorced in the past, that's fine.
Correct.
But if you're just in the midterm, then you can't.
Yep.
So good. Talk about just interest a little bit, as part of our training, is what we're going to teach on in that sense.
So there's things that you have to understand about understanding how interest works. We've had situations where we've had to create amortization schedules, and what does that mean, and how is interest affected. Some people didn't want to charge interest, which I'd love to buy a business from anybody who doesn't want to charge me interest, but there are guidelines that the IRS says that you can't do
You
that.
have to, it's
You have
required.
to, it's required, right? So if some people don't know that, you could be getting to the closing table and the closing attorney be like, there's no interest here. You can't do that. So then you have to change the structure of the deal. So it's those things that drive a business and really the terms of the business. And from an interest standpoint, look, interest is interest. But the reality is you have to understand, how does it affect your deal? And the worst thing that you could ever do is be surprised at the closing table. You never want to be surprised at the closing table. You're giving all of the parties involved ample time to review. You're making sure that the interest is being collected in a certain manner. Are there balloon payments? I mean, there's so much to it. And if you don't know what you're doing, you could.
That wraps it up for what we're going to kind of talk about. If what we're saying resonates with you and you go, yes, I do agree, we're going to have more businesses sell. And here's my thing. I want to say one more thing that I think is so important. I personally think you are cuckoo for Cocoa Puffs if you want to start a business from the ground up right now, because it's so much easier to just buy a business that's already doing, even if they're not doing great, you start with what they're doing and then build on it. It's so much easier, because getting the business off the ground, there's so much inertia that goes to, just think about a plane. Think about how much energy it takes to get it off the ground. But once it's in the air, it doesn't exert that kind of energy. And so if we can help you buy a business, that is so much easier than just starting from the ground up. And I think people just immediately think, I need to start it from the ground up. And that's not true. It's buying the business is so much better. And if you've ever thought about getting into this space, this training is going to be a game changer. So click the link below. We'd love to have you learn more about this and get you into the training program.